Appreciate you guys taking the time to jump on. Good morning, good afternoon, good evening from where you're calling in. I see a lot actually, of familiar names logging in. Many of you, of course, we have not seen this year, so great to see you guys or hear from you virtually. Thanks for joining, and a couple of you guys that were on our morning webinar just preceding this one on the Toronto data center market have jumped on for this as well. Thanks, guys, for I guess setting aside your morning for us. My name is Philbert Shih. I'm the founder of Structured Research. I'm joined by Jabez, our head of research, Candice Rodriguez, our director of business development. I'm in Toronto. Jabez is in Los Angeles, and Candice is in Miami. Two sunny destinations, and -8 °C outside with a bit of snow last night. I understand many of you in the Northeast of the United States also got quite a bit of snow. We actually did okay, not too bad, at least on Canadian standards. So sorry I didn't move the slide there, but we're your hosts for today. That's just a little bit. Just want to talk a little bit about us. I think I know that many of you work with us or have attended our infrastructure summit, which we were unable to hold this year in May due to the pandemic. This session, we've done a number of webinars this year. But what we wanted to do today was to do something towards the end of the year when things are slowing down, just kind of almost like a recap of the year, a level set on where we're seeing the sector, an online version of our market update that we usually present at infrastructure, if you will, minus the panelists, and just an update on the market share data and a bit of a little different twist. We wanted to make this a little more of a conversation between Jabez and myself, and we're going to try to navigate different parts of the ecosystem as well as different parts of the market on a global basis. So just a quick update on that event. Right now, there seems to be some light at the end of the tunnel, encouraging. I think all of us are cautiously optimistic. So we are looking at hopefully having something in 2021, but we'll keep you updated on things as they develop. As I mentioned, this year we've done a bunch of market updates periodically on various topics. They've mostly featured analysts. Next year, given that it's probably going to take some time, at least for live events to come back, we're going to continue with the online events, with webinars. We're going to expand them next year. Candice can give you more details. Feel free to reach out to her. But we plan to do analyst-driven content like this, as well as having kind of more traditional kind of conference panels with thought leaderships and executives discussing various topics. And so we look forward to doing that. And this is just a quick, before I hand off, let Candice say a few words. This is just a quick snapshot of what we have next. This is all analyst-driven webinar content. These are some of the markets that we're currently updating for data center interconnection and hyperscale. Jabez is going to touch a little bit today on the global co-location report that he finished, that is going to be coming out, and he'll touch on that in maybe January, February. And then we'll talk a little bit again, provide an update on what's going on in Edge in about February, March. So that's what we have in store. Candice, I think many of you who've been in the space for a while have known, and if you're a client of Structured Research, you obviously will know her as well. I wanted to just quickly let her say hello, say a few words, and I'll open it up to her.
Perfect, thanks, Phil. I'm Candice Rodriguez, and I handle a lot of our commercial activities here at Structure. I just wanted to pop in for a few minutes and just remind everyone, if you like what you hear today, and I'm sure you will, I want to encourage you to take us up on our offer of a free, no obligation trial. Doesn't cost you anything to just take a look under the hood. That is if you're not already a client. If you haven't tried our service, I'd recommend it highly. We'd be happy to share some sample reports. As Phil mentioned, we have some webinars coming up. There's sponsorship opportunities there. I'd be happy to share that. And I'll follow up after the webinar. But for now, just sit back and enjoy it.
Thanks, Candice. And
Sure.
I think you can open the door for your the construction team or the painting, whatever you've got going on there. Okay, so as I promised, a market update, and then we're going to kind of do some back and forth on various topics with Jabez. So if you'll bear with me, I'll kind of just quickly run through the market share data update that we have here. So we'll start with the managed infrastructure segment. And as you can see from this very colorful slide, we're tracking 7 different segments within managed infrastructure. Think of managed infrastructure as all the infrastructure hosting and cloud application hosting buckets that sit outside of, that are not colocation and not hyperscale cloud. So as you can see, it's this, by the way, is our data set has been refreshed to account for the new environment. We had updated them at the beginning of the year, and then halfway through the year felt that we needed to account for some of the changes that we had seen in the market. Having said that, we didn't make huge changes. We found that the sector has been pretty steady, pretty resilient. There've been some ups and downs, some bumps in the road, but the trajectory of the sector has stayed pretty consistent when you think of it on a global basis. So yeah, we have this part of the market growing. Our 5-year CAGR is at about 12%. You'll notice towards the right, the 5-year CAGRs do differ across some of these segments. And I think one to point out is that the impact of hyperscale is clearly felt across different parts of these ecosystem, across these buckets, and it's felt at different levels. And so like something like the managed cloud, the managed third-party cloud market is, as you can see, the fastest growing segment, and we don't think that's a huge surprise. But again, I think the punchline here is steadiness and a positive growth trajectory for all the segments all around, as you can see on that vertical column on the right, with the 5-year CAGRs all at around and above the double-digit year-over-year growth range. So speaking of hyperscale, this is our currently refreshed numbers for the hyperscale market. That kind of hockey stick curve effect that we often like to see is clearly happening here. We've got this market this year closing in at around 90 billion. We're pretty comfortable with that estimate. The 5-year CAGR is around 35%. For those of you who've seen some of our previous market updates, you'll notice that it has come down a bit, and that's primarily a function of just the sheer size of the market. It was definitely maybe just 2 or 3 years back that 90 billion was probably maybe only half of that, and the market was growing anywhere from 50 to 60% year over year. That's come down, but as you can see, the rates of growth are obviously going to be affected by how big this business is getting, and you can see quite clearly that by the end of this 5-6 year period, we're looking at a market that could be valued at around $400 billion, and that's just the hyperscale cloud component. Finally, the last category being co-location, another very similar to managed infrastructure in the sense that it's steady and has weathered a lot of the headwinds in this current environment quite well. This is our newly refreshed numbers from this month, and as you can see, we've got this market coming in over 50 billion, that's US dollars, and a 5-year CAGR of about 11.4%. I think the other takeaway here, besides the pretty steady growth trajectory, is the difference between the wholesale hyperscale piece and the retail piece. Those growth rates are different, one category is obviously growing faster than the other, and we continue to see that play out. As I mentioned just when we started off, Jabez has got a kind of full deep dive on the colocation market. So he dives deeper into this, as well as the interconnection-oriented colocation piece. So look for that report. If you're a client, if you're not, definitely reach out to us if you're interested, and Jabez will provide a summary in the new year. So what I've done here is taken those 3 categories that we just reviewed and aggregated them together. So managed infrastructure and those 7 subsegments, hyperscale cloud, co-location, add those 3 together and you come up with just over 200 billion US in 2020, according to our estimates. And you can see here a pretty healthy growth rate on a 5-year basis, just under a shade under 25%. The 5-year CAGR, and a lot of this is obviously driven by hyperscale, but if you take all the positive trajectory, put it together, what you have is a very healthy marketplace. So take those numbers, and if we just split them on a percentage basis, just to give you a sense of what the outsourced infrastructure market looks like. I think the story here again is in the red. Hyperscale cloud, creeping up towards half of the outsourced infrastructure market. And if current trends hold, and if our trajectory is accurate, we think that by 2025, by halfway through this current decade, we're talking 2/3 of outsourced infrastructure sitting on a hyperscale cloud platform. Now, that doesn't mean that this is a zero-sum game. This is, if you look at the numbers, yes, the colocation, the managed infrastructure as a percentage basis of the overall pie will have shrunk from, so you can see colocation 26.5, colocation in 2025 maybe around 15% of the market. But if you look at the aggregate sum under that percentage, you'll notice 53.9 billion, and in 2025 92 billion. Same thing for managed infrastructure. So a smaller slice of the overall pie, but definitely still growing on an aggregate basis. So this is just you can see again, displayed somewhat differently, but the trajectories continue, the percentage share continue to go in one direction for one category and in slightly other direction for the other two categories. So what we've done here is try to look at the on-premise piece to try to give you a sense of what the total addressable market looks like. And if you're a client, you probably saw some of this data already. We sent the report earlier this week. So if you look at the top on-premise, that's our estimate of what the on-premise world looks like today and how it's going to track going forward. And as you can see, very different from some of the outsourced infrastructure with the hockey stick trajectory. Here we have modest declines over time, and I think that reflects what's going on out there in the real world. On-premise traditional infrastructure being less and less common, hyperscale outsourced infrastructure being a model that is increasingly adopted and increasingly the deployment model of choice when it comes to your compute and storage infrastructure. So if you look at the chart below, the total market, what we've done here, the lighter hue being the outsourced infrastructure piece or off-premise, and then on-premise being the darker green. And then we've added those two together to get a total estimate. And this is kind of a better look at that, a total estimate for the total IT infrastructure market. This is infrastructure centric. It would be, we would argue, a relatively more conservative view of the market. It does not necessarily account for the full spectrum of managed services and consulting that are typically sold with managed infrastructure. But as you can see here, this is still a very large market, 525 billion. We estimate in 2020, and if current trends hold, moving up towards that trillion mark, probably towards the latter half of this decade. And on a percentage basis, I think the important trend again is to note that 61.2 you see to the top left will increasingly shrink as on-premise, and that represents the on-premise piece, the traditional infrastructure, as outsourced hyperscale continues to see more adoption. And if you look at it on a pie chart basis, there, we see on-premise on the left at 61, and then you see it towards the right, less than a quarter of the total, our estimate of total IT infrastructure. And that's pretty significant. I think that many of you, that we've been in this industry for a while. In the previous decade, we were always talking about the very early innings of a game, of a baseball game, or if you can use another sports analogy, the early, in the first part of a 90-minute football match. That story continues to move along, and we would argue, as we'll discuss on this webinar, we feel that those trends are accelerating. And so what was maybe 80-90%, with traditional IT outsourcing, is now moved to about 60, and then within this next 5 years, it's going to be in the minority. It's not going to be the predominant way people run their compute and storage infrastructure. That's kind of the punchline of the market, where we are from a market share database. In terms of our market share data and where we have the market tracking. I spoke a bit about the pandemic and how that's impacted these numbers, and we definitely felt it was important to go back and refresh our numbers this year based on what's happened out there in the world. And as I mentioned, and Jabez can tell me if I'm nuts, but I think things have largely stayed even pretty steady. There was a dip in the second quarter. You saw that in some of the hyperscale numbers. You saw that in some of the public comps on the data center side, but things have held through the second and third quarters of the year. When you look at all the reporting and some of the conversations we have with private companies, things have stabilized. There definitely been, and it's kind of what's happened is there's been kind of an offset. Obviously, there have been some headwinds. There are certain industries and verticals that are performing less optimally, and that'll have an effect on infrastructure providers. But there also been tailwinds in a lot of different sectors. And so Jabez has kind of talked about the what he's describing as a K-shaped recovery dynamic, and maybe I'll let him kind of talk about what he's seeing and how that affects the numbers.
Yeah, hey guys, Jabez here. So yeah, I think not surprising to all, there's sectors that have accelerated and done really well during the pandemic, and that's largely centered around digital infrastructure or digital first companies, e-com, digital payments, social media, remote working, especially online gaming and video streaming. So you have on the e-com side, you have companies like Shopify and Amazon, Ozone. On the digital payment side, you have PayPal, you have Square, social media. Everyone knows that really well. On the remote working side, you have a lot of these online collaboration tools like Slack and Zoom, just showing really strong growth. And on the online gaming side, which I think is going to be the future driver of infrastructure growth. And the reason I say that is because if you look at just how these hyperscale cloud players are placing so much of an emphasis on building their online gaming platform. So you have Amazon launching their Luna platform, you have Microsoft with xCloud, you have Google with the more mainstream version of Stadia. You have Sony with PlayStation Now, you have publicly listed companies like Sea Limited with their Garena platform, and then you have these kind of marketplaces like Steam and Tencent building a start cloud gaming platform. And then also, I would also bucket the Apple Arcade cloud gaming platform as well into that whole category. So if you look at the emphasis that these large tech companies are placing on online gaming and the investments they're making, this is going to be, I think, a huge driver of infrastructure growth, and also a huge driver of decentralization across infrastructure being distributed across multiple locations to get closer and closer to the end user. There's one thing to be said about video streaming, because it's kind of a very static way of delivering content. Big content companies cache large video files in certain locations, whether they use a flavor of co-location or a public cloud to store that content, and they're just delivering it one way to the user's device. If you talk about online gaming, that's a much more complex infrastructure work stream where you have both the gaming consumer that's has a device or controller that's providing inputs constantly on a millisecond basis to a centralized gaming platform, and that platform has in turn to aggregate all the responses from multiple gamers, even oftentimes hundreds and thousands of gamers at the same time. So I think the infrastructure complexity that will require that I think this world will require in the future to really push online gaming forward, and it will move forward, is going to be immense. And so I would say keep your eye on that particular vertical. On the lower end of that K-shaped vertical, you have industries that have been hit pretty hard due to the pandemic, and I would group them into two buckets. So one bucket would be they've been hit really hard, but they will eventually come back into full swing. So things like travel and hospitality, I don't think that's going to be depressed for much longer once the vaccine is out. I think there's a lot of pent-up demand, a lot of angst in terms of people wanting to travel, not just for business, but for pleasure as well. So that's going to bounce back. I think you're going to see some level of physical retail returning, but I think there's some secular trends around maybe office that's going to, I think, be a long-term decline. I don't think the office is going to go away completely, but I think it may not come back to the fullest extent like it was before the pandemic. Same with live events. I think there's also a huge demand and pent-up demand for live events to come back. So expect those certain things that I think people would really want to do after after being cooped up in their homes for almost a year now to bounce back pretty strongly. Phil?
Yeah, I mean, the gaming thing, I wanted to, like, I was, because I do these kinds of things. I was reading the Roblox filing the other day, and I found it interesting. So Roblox, just I don't play it, my kids do, so that's how I've become familiar with it. But I was flipping through it and noticed that they use AWS as their primary cloud platform, but they also run their own infrastructure, which not explicitly stated, but it was pretty clear that they're using colocation, if not, multiple colocation providers. In your following these games, I mean, just so you guys know, Jabez is a gamer, so he doesn't mind doing this kind of work. But have you come up, like, in some of these platforms, what are they running on? Have you found many of them are all in on cloud, or which cloud are they using? Or they're using a combination, like Roblox, the same combination of cloud and colocation. Zoom quite clearly is using, it's been out there, right? Colocation and 2 different clouds. What are you seeing on some of these other platforms that you're familiar with?
Yeah, so it's really interesting. Back in the day when you were playing online games, you had no idea where the server that your device was pinging off of, and so you have a sense for the latency. Usually, back in the day, you have latencies between 50 to 70 milliseconds, and that was considered pretty good for a FPS game. FPS meaning first-person shooter game like a Counter-Strike, and then nowadays, I think that threshold has come down to the kind of 20 to 30 millisecond level. And what's interesting with a lot of the games that we're seeing now, for example, there's a battle royale game similar to Fortnite called Apex Legends, and it has a feature in the game where you actually are able to select which data center that you're playing out of. So you can select the Google Compute regions in Oregon and across the US West Coast. You can even select, I think, physical colocation data centers that you're playing off of in Salt Lake City. And so it's kind of interesting that the user now is able to select which data center that they're using to play on these multiplayer online server games. So I think the flavor of choice is a reflection of increased redundancy. So if let's say you're experiencing packet loss on one server, you don't have to be dealing with that consistently. You can just switch servers based on your preference. So I think that's going to be a pretty interesting development of how the user, the consumer, is getting a more hands-on, a more transparent view of the infrastructure piece within online gaming.
Mm-hmm. Yeah, that's a great point. Yeah. Any other thoughts on the recovery before we move along?
No, I think that covers most of it.
Okay. Besides the fact that we think we think that the current trajectory, we think it'll continue. It'll probably be a somewhat sluggish or flattish, stable kind of next few quarters. But we're hoping that by middle of next year, this recovery dynamic will start to take hold in a more prominent way. So here's a topic that might have been a little more suitable last month, but we're never out of that conversation, I guess. But yeah, I thought this year was something that we don't talk about too much when it comes to internet infrastructure, is the whole geopolitical aspect. We've seen just various customers being impacted, large hyperscale type customers being impacted. We're seeing kind of regional dynamics, like in Europe with the whole, I think, the Gaia X initiative, trying to build a Euro cloud. These things have happened before. There hasn't always been a great deal of success with them. But yeah, I mean, Jabez, maybe you want to talk a little bit about you use TikTok, right? No,
not really, but I'm
sure you do. Come on, you're a young guy. Yeah. Again, another thing that I don't use, but I'm familiar with only because I'm watching my kids use these things. Yeah. Any thoughts? I mean, maybe before TikTok. I mean, I thought the best example this year around the whole geopolitical thing was around Naver. I think that's how you pronounce it. In that's a South Korean platform, right? But maybe talk about that and how they made an infrastructure choice based on geopolitical factors.
Yeah, so Naver is the parent company of, everyone knows the one app that they have, which is Line Chat, that's very widely used across mostly Asian markets, so Japan, Hong Kong, and Singapore are big Line Chat users, and obviously Korea as well, given it's a Korean company. But yeah, Naver was the first sort of large tech company to come out and say, hey, we're actually going to move a lot of our data backups from our Hong Kong data centers out of Hong Kong into Singapore because of data privacy or geopolitical concerns with the, I'm not sure if all you guys are aware of what's happening in Hong Kong, but there was a new security law that was put in place in Hong Kong, largely influenced by the Chinese government, that would enable the Chinese government to essentially take or have access to your data on the grounds of cybersecurity. And so that caused a kind of a big stir within the large tech community. And I think the reason, I think Naver was the first one to publicly come out. And I think the reason why you haven't seen other hyperscale companies come out publicly is maybe because a lot of them still do business in mainland China, and you don't want to be coming out publicly and saying these negative things about what you think of the security law in Hong Kong, because it's largely tied to what's going on in China. So I think while the large tech companies in the US may not be coming out publicly and saying, hey, we're moving our data backups from Hong Kong to Singapore, you can suspect that that's happening in the background at some level, given these tech companies are very aware and very knowledgeable of what's going on with their user data. So I think expect that to develop over time. I'm not sure exactly how that will play out, but it's definitely something to watch, Phil.
Yeah, I mean, it clearly has a big impact on the market. I mean, we've tracked what's understood to be a very large deployment in Ashburn from TikTok, or the parent company ByteDance, and so if how the geopolitical winds blow can have pretty big impact on several megawatts of co-location capacity potentially for operators. And so that's why we're tracking it as well. I think I'd make the comment that in many ways this has been geopolitical impacts and drivers have been around for a while, dating back to the kind of the NSA snooping or security issue. And countries are, and this I think has an impact on just hyperscale and data center builds around the world, and even at the the MSP level as well. For smaller increments, organizations are just more wary and more careful about where they place their data and how it's managed. So yeah, and that'll continue. I think, if anything, be more prominent in the future. Do you think Jabez? Do you think any? I mean, not to talk about politics. I'm sure we've had enough of that in 2020. But do you think with a new administration in the US that something like the whole controversy around TikTok, what are your thoughts? You're probably a little closer to this. I'm going to plead ignorance, being north of the border. Maybe throw it back at you.
Yeah, so I look at it several ways. I think, and it's just purely my opinion. Not anything that we believe as a firm, but looking at how the the Biden administration, the cabinet people that he's bringing on board is largely very similar to what the Obama administration was built on in terms of cabinet members, and it just seems like in the beginning I think he will be kind of he won't just kind of flip the switch and be like, hey, China, let's talk and let's be friends right away. But I think over time, as you see his administration start to ramp up, I think they will try and have a more amicable relationship with China versus the Trump administration. That's just purely my opinion. And I think also another way, you look at the stock market, right? Look at how stocks that have direct relationship to the TikTok business, so Fastly being the primary CDN that caters to TikTok, that stock has been climbing and recovering. We look at Chin Data, which has 80% plus concentration of their business coming from ByteDance. That stock has been doing well. So the market thinks that based on what they're seeing from a political standpoint, that it's pretty bullish that that TikTok will continue to be able to operate in the US. I mean, even now, there was a deadline that was hit previously where the Trump administration ended up not enforcing its the the ban or the cessation of activity from TikTok. And so I think ultimately, I think TikTok will be fine to operate as long as they can establish the fact that they are storing user data in country and not pulling that data back into China. So I think overall, I think it would be fine. I think there's also a big question mark with how India is addressing a lot of these Chinese apps. That's also caused some tension with international relationships. But yeah, Phil, I think you mentioned earlier about Gaia X and the hyperscale cloud platforms specifically catered for the European region. Like, how viable do you really think that is? Can they actually pull this off? Like, will this actually be a viable hyperscale cloud platform, or is it something that you think will start and then they're going to realize how hard it is to scale and develop all these capabilities, and it'll kind of fizzle out? So I'm just kind of curious how legitimate you think that is.
Yeah, I mean, definitely, there's been chat around that for many years. I know we work with Daniel Beezer, who's based in London, and he's a bit of a skeptic himself, and it certainly hasn't been shy about sharing his opinion with me. I honestly, I would say I'm a bit skeptical. I don't know if I think that there will be kind of national or European champions, in the sense that they'll be promoted as homegrown, cloud infrastructure platforms like an OVH in France, which is probably the best example. But I think at the end of the day, that the hyperscale platforms just have so much scale and scope. They're going to be able to tailor, their the specific requirements that are in those regions, tailor their cloud platforms to be in compliance, to make users more comfortable, to provide more transparency, to provide the tools and the documentation that people are going to require. I don't think that's. I think that'll, it's a process that will take time to play out. Probably a lot of negotiation and evaluation, but I do think that that's eventually what happens. But that's not to say that we're people, if you follow a lot of the commentary that we provide, we definitely don't think hyperscale is a one size fits all. There's always going to be room for different size of platforms, whether for small organizations, mid-sized organizations, on a regional basis, on a vertical basis. So I think that's where this goes. I think that the hyperscale platforms get better at being able to meet the concerns of various regions, jurisdictions, governments, but that there's always going to be room for certain types of requirements, and whether they're regional or around data privacy, I think there's going to be room for those providers. But are they going to be all encompassing and kind of keep or prevent the hyperscale platforms from being the not necessarily default, but the primary or a very significant platform and of choice for IT infrastructure? I think that's where we're headed, and I don't necessarily think this will stop it. So yeah, that's where I come out on it.
Yeah, I think I know we saved Q&A for the end, but there's kind of a related question that came up on the Q&A, which is, are we seeing some sort of a migration towards Taiwan, given what we're talking about with Hong Kong and geopolitical tension? Yeah, thoughts on that, Phil, and then maybe I can jump.
Maybe let you grab that one.
Okay.
You've done more work on that than I have.
Yeah, so I think Taiwan is super interesting because it is ultimately a Chinese-speaking country, very similar to Hong Kong and China, and there's not many countries in Asia that's has as much Chinese roots as Taiwan, but also separate in the sense that it doesn't share a physical border with mainland China. There's some sort of physical separation, and also very close ties with Western countries like the U.S. So I think Taiwan is very interesting because initially Google started off by building its own data center in Taiwan. It then doubled down to build another data center, and now it's building its third self-built data center in Taiwan. So that to me was already validation that Google, that hyperscale clouds could and will ultimately thrive in a country like Taiwan. And I think this year validated that with the announcement from Microsoft Azure that they are building cloud regions in Taiwan, that they're creating these R&D centers to employ engineering talent and develop talent in Taiwan. It's just a great market for tech, because it's also a huge semiconductor manufacturing country, large pools of very highly trained, smart, talented people. And it's also helping, and I think that what's happening in Hong Kong is also making people realize that, hey, we need to diversify not just subsea cable concentration, but also data center concentration outside of Hong Kong. And I think ultimately you'll see more and more submarine cable systems decentralized from markets like Singapore and Hong Kong and into these markets like Taiwan or Korea or Jakarta to really start to distribute that architecture across the Asia Pacific region. And I think you'll start to see it's very clear where the hyperscale clouds go, everyone else follows. So I wouldn't be surprised if you start seeing more M&A transactions, more data center builds from large international co-location companies in Taiwan. Right now, the Taiwan market is primarily, like with most secondary and tertiary Asia markets, it's very telco dominated. So you have the big telcos like Chunghwa Telecom, Far East Tone, that are and Chief Telecom that are the primary data center players there. There's not a ton or very few carrier neutral options in Taiwan, which is forcing a lot of these hyperscale clouds to build their own data centers there. And granted, Taiwan isn't a bad location for self-builds, given the Taiwan government has provided incentives for Google, and I'm sure they'll do something similar for Microsoft. There's land is not really an issue as long as you don't want to build in the Taipei, the northern kind of Taipei metro area. If you go south towards like Kaohsiung or Tainan, that area, or Changhua County where Google is situated, that area has a lot of land, industrial land that you can build on. There's access to renewable energy in the form of solar, and they're building more and more renewable energy infrastructure in Taiwan, given that land is, it's not as land strapped as a Hong Kong or Singapore. So yeah, I think there's a lot of good things going for Taiwan, and I really expect that Taiwan market to develop, to looking more and more like an international hub moving forward. Not sure if you have anything to add, Phil.
No, I mean, just another positive for them. I mean, they've handled the pandemic extremely well. So another, economy that is probably going to recover and come out of this on the other side probably faster than others. So that could help. Don't know if I had anything. I think that was a great summary, and want to be sensitive time, but punchline I think is definitely geopolitics. Increasingly, as this business becomes global, increasingly a factor that decision makers in this space, whether on the operating side or the investment side, have to consider as they strategize. Yep, this one I think I may have to throw back to you, Jabez, but we wanted to just quickly, we've been talking about global deployments, we've been talking about hyperscale builds. Obviously, many of them are with co-location providers. That's, I think, the main, one of the primary kind of spin-off effects from this hyperscale value chain is for the wholesale hyperscale data center operator. Well, maybe Jabez, if you just quickly in a few minutes run over, some of these. It's a very common question for us, but the build versus lease dynamics. Where do you see them right now? This I know is kind of your summary on a graphical basis, but maybe you could talk through that for us.
Yeah, so I think there's a clear separation or bifurcation between the top three clouds, so Microsoft, AWS, Google, and then you have kind of the rest of the hyperscale clouds that primarily encompass the Chinese clouds and the tier 2 kind of US clouds. And so what you're seeing is that for the top three that are really the ones competing head to head furiously against each other, they are still, even though you'll see headlines of self-built in certain strategic markets, whether it be because of renewable energy availability or incentives by government, or just a lack of carrier neutral data center options in a specific market, you'll see them build opportunistically across some of these emerging markets and kind of low power costs, lots of land availability, renewable energy markets. But I think primarily when you look at how these hyperscale clouds are deploying their footprints overall, they're still going to favor leasing, just because in these kind of core metros, like in a Tokyo, for example, or in Hong Kong or Singapore, even in India, the option to self-build is it's a lot more challenging for them. And I think if these markets have a lot of hyperscale co-location options, I do think that they will still prefer to lease co-location capacity from providers moving forward, as they want to allocate most of that capital and bandwidth to be building on their capability in terms of the cloud platform. So I don't think they want to be real estate companies. I don't think they want to be landlords. They will do it. They have to drive their digital infrastructure footprints in select strategic markets. But ultimately, we think leasing will be the consistent way to move forward. And that's especially true when you look at the bottom tier or the lower tier in that bottom left chart, where IBM and Oracle do not build their own data centers outside of the US. Alibaba, Tencent, Huawei, all these Chinese hyperscale cloud platforms outside of China, they don't build their own self-built data centers to our knowledge. And even I would like to also note that in China, they're also shifting away from self-builds. They're actually using, they're building stronger relationships with hyperscale providers like GDS and 21 Vianet and Dr. Pang and Chin Data to satisfy their hyperscale data center requirements. So I do think that in the long term, that leasing is still going to be the mode of operation or the main driver of growth for them or for the industry for that matter, as they build out their footprint, they decentralize their footprints into multiple markets.
Yeah, I had a couple, great insights. And I'm going to comment as well. But before we do that, we had a couple follow-up questions. The first question was, is this a global view or an APAC view? This is a global view. Second question was, Jabez, what would you say 4 or 5 years ago? What were the main differences between this chart and if you had built it 4 or 5 years ago? And I can quickly follow up on your comments.
Yeah, I think 4 or 5 years ago, a lot of people I think would have expected more self-builds, given that 4 to 5 years ago, everyone sort of took their cue from the US market, and the hyperscalers already started building these large campuses in the slightly more remote US market locations. And so I would have thought that there would have been more self-builds in 5 years ago looking at the market. But I think the way that cloud adoption has accelerated in a short span of time, and how hard it is for these hyperscale cloud providers to keep up with the growth. I think that was a huge driver of the leasing. So I think as growth continues in the trajectory that we're projecting, I think you're going to see the hyperscale clouds continue to lease large chunks of capacity. I mean, they're essentially chasing their tail and trying to keep up with all that growth. I think when the growth starts to slow and starts to plateau in certain markets, I think that's the indicator, or that's probably a sign that they may consider self-building, because they do not need capacity urgently anymore. They can take time to do some capacity planning and some reevaluation of their existing data center footprints, their data center assets. But for now, I think we're still, like Phil said earlier, we're very early innings of the cloud growth story. And so I think in the near term, I think there'll still be a lot of leasing moving forward.
Yeah, and I think another dynamic to think about is whether it's an existing market or a new market entry. So just to take a couple examples that global examples that were in markets where we spent time. So here in Toronto, just this morning, we presented our market update. This is a market where there are no hyperscale self-built. In Montreal, which was in Quebec, where hyperscale first landed to serve Canada. The initial wave of hyperscale deployments over the last 3 or so years have been 100% with leased third-party co-location providers. And then in the last year or so, we've come across a self-build from one of the large platforms. That's not to say that provider is not using co-location. It clearly has. It could clearly will continue doing that. But I think that some of these platforms, as Jabez kind of alluded to, it takes them some time to get familiar with the market. Time to market is so important. They first probably want to get set up and running, build out their ecosystem, their value chain, their partnerships, hire, train, become familiar with the nuances and the specifics of the market. And then they if there's an opportunity to do something like a self-build, they will. That's certainly what Jabez saw in Singapore when he started first traveling there, visiting the market 5 years ago. I don't think there were any self-builds. You can correct me if I'm wrong, but now there are a few there, but it's still been a primarily co-location driven market. And now I'll just move to the middle to Europe as an example. There are some relatively younger hyperscale markets there. We'll throw Paris is a market we spent a lot of time in. That's another market that has no self-builds that we are aware of just yet, as this kind of initial cloud build out, hyperscale build out phase is happening. It's been all the clouds are consuming infrastructure, and so sorry, our co-location infrastructure. So yeah, I think and then the other dynamic to think about is that when you get further out there to more kind of more off the beaten path locations, that dynamic sometimes can reverse itself, in the sense that because of, Jabez again commented earlier about, in some markets around the world there is a lack of quality co-location inventory, just because the market is so nascent and is not yet fully matured, that hyperscale will enter because of the long-term market opportunity, and will, instead of entering and using co-location like we've seen Toronto, Montreal, Paris, will come in and start with a self-build, and then maybe move to co-location as the market matures. We've seen that in Jakarta, in Indonesia, which is a market that is very nascent, pretty small on a megawatt basis, total megawatt basis, and is in the the initial first couple of years of a hyperscale build out. And so yeah, it's not I don't think there are any. I think the punchline is there are not any kind of set patterns. They definitely do depend, not just with the provider and the provider's scale and the provider's expertise and preferences, but also the specifics of the market, the underlying cost, quality of infrastructure, the geopolitical environment, et cetera, et cetera. Yeah, anything? I think I've addressed most of the questions. Jabez, anything else before we move on the build versus lease?
No, I think ByteDance is also one to watch in terms of the if you look at the chart, ByteDance is probably the only one that is not really a public cloud platform. And it's the reason why we include ByteDance is just the amount of leasing and the size of leasing that they do is very similar or categorically similar to these hyperscale cloud platforms. So they don't have a public cloud platform as of yet, even though there have been some rumors that they're trying to develop one of their own. But that's the reason why we've included them in this group as well. So.
Mm-hmm. Yep, and I think maybe before we move on, one more comment I'd make is that you're starting to see, especially in the United States, hyperscale probably pushing towards self-builds in certain situations where they can procure large amounts of renewable energy in locations where there's also ability to get affordable and large plots of land. So we're seeing that. I think that's driving a lot of the self-build activity in Ohio. There's obviously not a lot of third-party co-location inventory there as well. So I think you'll continue to see that. So you'll see the pendulum move depending on market maturity and where you are, what market you're talking about around the world. Okay. Not to hammer away at hyperscale and hyperscale data centers too much, but we'll maybe continue a little more before we shift gears a little bit. Maybe we'll just, in our tracking, we've seen, I think this next wave of hyperscale build activity increasingly is over in new markets or younger markets around the world. Certainly there's still, obviously in the United States, hyperscale continues to grow and expand and move out, in search of edge locations. But in Europe, I think we are in that kind of early second or third or fourth year of hyperscale build out, and this is accelerating. Maybe Jabez, I think love to hear comments around around the public comps that you follow, who I know you've made the point in our notes and in conversations with me that it's performance on a quarter to quarter basis. A lot of it's driven by what they're doing outside Americas. That's not just Europe, but Asia as well. Maybe you can just kind of summarize your thoughts on how important Europe is to the sector's performance now.
Yeah, and I think you're seeing that reflected on the M&A side as well. I think the Digital Realty Interaction acquisition was a big European hyperscale kind of validation, just because of how important ecosystems are to hyperscale platforms, and just having teams that are in country, given that Europe is both slightly fragmented given the number of countries in the region, but also homogenous in the fact that there's a kind of a overall governing body in the European Union that kind of ties it all together. But yeah, I think you're seeing companies that have placed bets, had the foresight to place bets in Europe early, like an Equinix, like a Digital Realty, even a CyrusOne with their Xenium acquisitions. And then you're seeing Vantage with NGD and ETIX. Those are kind of big signs that, hey, the European wave is coming. You're also seeing new market entrants like Global Compute Infrastructure focusing on the hyperscale opportunity in Warsaw. So yeah, I think all those activity points just shows me that, hey, Europe is going to be the next frontier for kind of that immediate near-term need for hyperscale. I mean, Asia will always be a high growth market, but Europe especially, not just in the flat market. So I think we talk a lot about the flat markets, and obviously they're going to continue to grow and not slow down, but also looking at outside these flat markets. And I'm not as familiar with them as maybe Phil and Ainsley, but we've been talking a lot about markets like Madrid, Marseille, Milan, Warsaw, even Brussels to some extent as well, and some of these gateway markets in Eastern Europe that have kind of that connectivity outside of Central Europe, also showing some promise. So yeah, Phil, any thoughts on some of these other markets outside of flat that you guys have been focusing on?
Yeah, absolutely. I mean, I think this year, just 2020, has been, pandemic notwithstanding, has been just seen so much activity in Europe from hyperscale and a data center perspective. I think there's been a wave of announcements over this year from both AWS, Google, and Azure with new locations. Poland, just to name a few, Poland, Greece. I think you saw Digital Interaction acquire something in Croatia. I'm probably missing a few countries there already. And then you're seeing some of the markets open up, some of the national markets open up a second or third hub in that market. So we've talked about, and we'll talk a bit about kind of hub and spoke markets around the world, but like Frankfurt has obviously been the primary hyperscale location in Germany, but Microsoft announced that it's going to build hyperscale cloud in Berlin. And Munich has been an edge market that operators have targeted. You have the Paris and the Marseille dynamic, and you could see something to the southwest of France where the cables land, in the Bordeaux region. So absolutely, yeah. I think it's not just those primary four markets. There are another 4 or 5 markets that are big enough that Hyperscale says, hey, we're going to set up infrastructure to serve those end users. And then the existing mature markets are expanding and scaling even further, and looking to move out to other parts of the country as well. So yeah, I think it's been a big year. It's been a big year for the expansion over there, and we don't think that's gonna slow down at all.
Yeah, I think one market we left out was Zurich. We've been hearing a lot of hyperscale and M&A activity surrounding the Zurich market. I think talking about Germany, it might be the first market to have a triple hub market. So you have Frankfurt obviously as the core hub. You talked about Berlin as the next hyperscale hub, but then also we recently saw companies like Interaction place bets on Copenhagen as well with a 14 megawatt build recently announced. So I think Germany could be kind of that market with more than 2 main hubs in terms of that hub and spoke model that you've mentioned.
Yeah, and Microsoft has always been, ever since they started building out the Azure, always been more aggressive about being in more markets, right? And AWS has always been more conservative, building out more infrastructure in fewer locations. So that's I think, like you mentioned, Copenhagen. Yeah, I mean, Microsoft also announced at the same time that they're building out cloud in that country as well. And these countries are not necessarily huge countries. 10, 50. I don't know the populations, but they're living in a country that's 35 million. I would say they're smaller than us. So yeah, and Greece, I think we did mention as well, which another, which was also something that happened on the M&A side. So some of these topics we were planning to get to, but yeah, no worries. Certainly can jump in now. We're already pushing the 1 hour mark.
Sorry, one correction. Yeah. Sorry, Copenhagen is not in Germany. I made a mistake. I was talking about Munich. Munich as the next market. Copenhagen is in Denmark, which is more a Nordic market that we're seeing some activity on. So apologies for that, guys.
Yeah, but it's true. Microsoft in Copenhagen and that much and digital building there as well. So that much is accurate. Okay, let's move along. So yeah, I mean the punchline: lots of big bets being made on a global basis. I think that for you on this, for many of you on this call, familiar with what's going on the investment side, I think one of the biggest changes over the last, just with the size of what's going on and the scale, definitely a new profile of an investor has entered the space as capital requirements continue to increase and projects get bigger. And so of course there's also risk sharing partnerships as well. So I think we've touched on some of the activity that many of these firms are involved in. Maybe before we move on, Jabez, quickly talk about, I think we wanted to talk about some of the JVs that have been going on around the world, Europe, Asia. Yeah.
Yeah, I think maybe it might help to kind of walk through each of these guys and kind of talk about who the main platform is that they're invested in. So I think, yeah, from a JV perspective, you have the most kind of obvious one, which is MC Digital Realty, which is a JV between Digital Realty and Mitsubishi in Japan, and that's been ramping up very nicely for them. Firstly, with the hyperscale builds in Osaka, and then recently they've announced a large kind of hyperscale campus in the Inzai area that's going to provide north of 120 megawatts of IT load capacity, and so really that's going to bear fruit, I think, in a very very hot market like Japan. You have GIC kind of being that first kind of JV investor really by partnering with Equinix, not just in Europe, but also in Asia as well. And also with, I think, GDS in China as well. So they're very active on the JV front in terms of investing in assets, stabilized assets or stabilized hyperscale assets. But then, yeah, I think, Phil, maybe I'll touch on some of these platforms and then you can fill in the blanks, because I know, starting from the top, I'll start with Bain Capital, which initially invested into two main platforms, which is the Bridge data center platform across Malaysia and India, and then they have the Chin Data platform. And so recently they've tried to bring all those together under the Chin Data brand. Hence the kind of platform that they're building with the IPO. You have Colony Capital that's making a lot of investments in the US with Colony Capital and Digital Colony I think are very kind of very integrated companies from an investment standpoint. And so you've seen their investments in Zcolo. They're obviously focusing on global markets, so expect more of that from them. I think from Goldman Sachs, they had that big exit with their investment in AirTrunk that has paid off handsomely as a bet, as a hyperscale platform bet for them in Asia. And you have I Squared Capital, which is has building a platform with the BDX, Big Data Exchange data center platform. Recently acquired some telco data center assets from Telstra across Singapore and Hong Kong. And then you have Macquarie being investors that have taken majority stakes in AirTrunk and continue to invest across the infrastructure ecosystem as well. And then you have Warburg Pincus, initially with started off investing in 21 Vianet in China. Recently, they've made bets on Princeton Digital Group, which is building a Pan-Asia platform that we think is really interesting across a combination of mature and very high upside markets like Indonesia, India, Singapore are some markets that come to mind. Phil, anything that you want to, any of those guys stick out to you in terms of platforms that are of note?
Yeah, maybe I just summarize kind of what we're seeing within this large group of investors. I think I think what's hard to miss is it's really hard to miss the fact that these investment vehicles are looking globally around the world. They are something like here, Ontario Teachers Plan has for some time now invested in Asia. It is never seen borders as a hindrance or a barrier to where it wants to go. I think so. That's I think one interesting dynamic, and speaks to what's how the opportunity what the opportunity presents right now. It is simply you have to look around the world, because that's where this infrastructure expansion is going. I think the other thing to think about is platforms like Digital Colony Capital are looking, are taking a very ecosystem wide approach. So they're looking at not just the data center the piece, they're looking at edge, they're looking at wireless, they're looking at fiber, all the infrastructure components that are going to be eventually when the edge plays out are going to be brought together as part of a single ecosystem. And I think that there are other platforms here that clearly have investments in some of those other adjacent areas. And I think you should expect that they will have a more cohesive, or not to use the word ecosystem too many times, but an ecosystem approach to how they look at the sector and how they make their bets. So yeah, I mean, I think that's, and these investment vehicles continue, I've been doing the work that we do. We are regularly speaking with people from around the world that are new. I think that would be the other thing, that are new to the space, that have come from real estate, come from other infrastructure investment sectors, but have now, are showing much more interest in digital infrastructure as we move from the old world to the new, and to put it bluntly, and they obviously really like some of the fundamentals in the sector. So I think that the activity shows no signs of slowing down. So maybe we'll move on and talk about some of the and that again kind of underscores what's going on in the world, not just the expansion activity, but the overall upside and opportunity. We mentioned Europe, and there's some, as you'll notice from this group of relatively younger and newer companies, that there are 4 European Union flags there. And speaking to what's going on there, but it is there are platforms developing to go after this, whether that's like Global Techno Realty, which is a obviously experienced operating team that's going Digital Edge as well, is an experience backed by some experienced operators, and then there are some other organizations like K2 Data Centers in Singapore, which is which come from outside the sector, but have built a practice and are continuing to invest in the sector. So, Jabez, do you want to maybe talk about something like, want to pick one of these? Maybe you've been interacted with all of these guys.
Yeah, I think
the one interesting.
Yeah, the ones that stick out to me, I think Digital Edge is really interesting just because of the pedigree of the management team, mostly ex-Equinix management team guys that I've known for some time now, that are Asia Pacific focused. So Samuel Lee, Andy Rigoli, and those guys know the markets extremely well. Kei Furuta from Japan, and it's really interesting to me that they chose Japan to be their first market to build the platform from. And it just speaks to how much growth and how much upside and how hot that market is for not just for hyperscale, but for connectivity as well. And so I think they're trying to do something different. Most of the new platforms that are coming to market, almost all the platforms you see there, with the exception of leading edge data centers, which is more of an edge, remote edge data center play. These guys are chasing hyperscale essentially. So they're building large campuses to chase after hyperscale deployments. Digital Edge is coming in from another angle, which is they're trying to basically build an Equinix 2.0 retail plus interconnection business in Asia. And so that's I think that's a daunting task, but also a very I think the market is, the signal from the market that we've been hearing is that it's a very much needed entry, because it can't just be that 1 or 2 companies or 3 companies in the world are the main interconnection providers for data center cross connects in these carrier hotel locations across the world. So I think, yeah, Digital Edge started off with 1 asset in Osaka, 1 asset in Tokyo. We do expect them to continue expanding, not just in Japan, but look to other markets across Asia Pacific to plant their flag. So really, I would keep a close eye on the Digital Edge guys. K2 is another interesting one because, like you said, Phil, they came outside of the data center business. If you don't know K2, they're owned by the Kwok Group, which is a very large conglomerate based out of Singapore. They own the Shangri-La hotel chain. They have logistics businesses across Hong Kong, Singapore. So they're a very large organization that have that have run very successful businesses across many different segments. But yeah, they've done really well in markets like Dublin, where they've catered to a lot of hyperscale demand out of the Dublin market, and they are looking at other Asia Pacific markets as well to expand into. And so expect them to make more of a splash in Asia on the hyperscale front as well. Not sure if you have anything to add on those guys.
Yeah, maybe I'll pick up and then comment on a few more, and then we'll move to the next the next topic. But just FYI, guys, for you guys here on the call, I know we've been already talking for an hour, and we're probably going to go close to another hour. But if you have a meeting, have a call, family to attend to, there will be a recording, and we will post that. So just let us know. But of course, we not trying to scare you away, but would love for you to stay with us and as we continue on this presentation. So conversation, I was trying to say. Sorry. Yeah, the K2 guys. So yeah, I guess and we're able to disclose this now. I mean, they are entering a second market, and so they will be entering Jakarta, Indonesia. The details are a little being kept close to the vest right now, but they will enter that market and have a multi-regional platform. So I think that's really interesting, and I think there have been questions from Thomas and some others around markets in that part of the world. We are having a webinar on the Jakarta market on January 8th, 2021. So, and that will be, can't remember, anyway, it'll be in an APAC time zone. So I'm not sure if it's the 8th or the 9th actually, because I typically do it the day before in the evening when it's the morning in Asia. Just I'll quickly comment some of these other kind of the new platform, new company formation in pursuit of some of these opportunities. I think the leading edge data centers, that's an interesting one because it's looking at that second tier of markets in Australia, not the non-Sydney, Melbourne category. Quantum Loophole, I think is interesting, very in stealth mode right now, but some very recognizable names backing that, and it seems like they're doing something around large or something large scale renewables around wholesale data centers, and I think that's going to be interesting, as well as something that we'll see more of in the future. And then again on some of these markets, I think it's Kevlinx or Kevlinx, I'm not quite sure how to pronounce that, building around a market they see some hyperscale potential in, which is Brussels in Belgium. So yeah, I think that's what's great about the sector. It's there are always new entities. The opportunity is big enough that new entities are coming in, management teams that have exited other companies, taken that expertise and frankly gotten better at what they do, or investigated, research, and understood new opportunities, and are going after that. And that will just continue to drive some of the independent provider activity over the next decade. And so, yeah, we've been hammering away on geography. These are some of the, just a snapshot of the activity that we've seen in the last year or so. We won't go over that in too much detail. We did want to maybe spend some time chatting about M&A. Where to begin? So I think we've touched on a bunch of these. A lot of the big deals have been, motivated by market entry, new geographies, quickening time to market rather than building organically. And so all these did, I think, many of these deals you are all familiar with. I would highlight just some of the activity in Canada with Equinix and Bell Canada, and then Vantage acquiring another provider, Hypertech, in Quebec around Montreal. Digital Interaction, of course, and DataBank. The Zcolo thing was really interesting as well, because it really took their footprint and just created something completely different. So very much very much in a play to getting right out to edge markets, to secondary markets, to serving underserved markets. I think the global aspect we've touched on. Maybe I don't know, Jabez, you want to talk to the India, Equinix in India, or anything? Any thoughts there? Or
yeah, I think India is a market that we've seen a lot of activity. A lot of international providers want to enter India. NTT was kind of that trailblazer in terms of their acquisition on NetMagic back in the day. I can't remember how long ago it was, but they've been in India for a while through the NetMagic acquisition, as they've built a pretty solid business out of India. And you also are seeing companies like Colt building massive, I think 100 megawatt hyperscale campus in Mumbai. So Colt DCS is doing some really interesting things in Europe and Asia. You have Digital Realty also exploring India with partnerships and MOUs with large conglomerates there. So I expect a lot more builds there. And then you have Chin Data through the Bridge Data Center platform. They're also building a pretty sizable hyperscale campus in Mumbai. So yeah, I think India is going to be a huge center of data center builds moving forward. I think it's I would say India, Indonesia, and maybe you can put Korea in that bucket as markets that are right now kind of tier 2 in size from a megawatt capacity standpoint right now, but have the potential to easily be tier 1 markets in size when you're talking about putting them in the ranks of a Singapore or Hong Kong or Tokyo or Sydney. They could easily reach that level of scale. And so that's why you're seeing a lot of providers invest in that market. And Equinix is essentially investing in their kind of core bread and butter approach of buying interconnected assets in new markets to the extent that they can. And so I think GPX is the closest kind of Equinix in India that they're able to enter that market with. So I expect them to start building that interconnection retail portfolio, and maybe even expand the packet platform in there as well, Phil, maybe with the bare metal. But also, don't be surprised if they quickly pivot that into hyperscale as well and start to address hyperscale demand in India after being comfortable with operating in the market, understanding the landscape, identifying land, and speaking with the their hyperscale customers. So I think India is going to be a very interesting market, and it's also one of those markets like Frankfurt, right, or like Germany, where you have the potential for more than 2 core hubs. So you have Mumbai obviously as the core hub. You have Hyderabad being a focus for cloud nodes and cloud regions, and then you have Chennai, which is another interesting market on the eastern side of India that is going to be, we think, a hub for more subsea cable activity landing on the eastern shore of India. So that could also garner some hyperscale activity there as well, in addition to Mumbai and Hyderabad. And then you also have other markets like Pune and the Delhi market. So I mean, India is just such a huge country, right? And I think the opportunity there for the providers that can figure out how to navigate that landscape and time it and bring capacity and time to market, and get that down. If well-timed capacity will succeed and do really well.
Yeah, your knowledge of geography in India is quite impressive. But I noticed you got apprehensive there about Frankfurt. No, Germany. After Sasha called you out for getting a city wrong, that wasn't Germany. So little nuance about his. Yeah, little nuance about Jabez's geographic knowledge of geography, I should say. Okay. Yeah, sorry guys, it's taken so long to get to a little more on the MSP hosting cloud side. That went a little long. The whole conversation around hyperscale went a little longer than we may have expected. But from an M&A perspective, it's probably been less of a. 2020 was probably, just given everything, probably a little slower than what we usually see. Having said that, there was definitely a notable and meaningful activity out there. I thought, I've identified some companies here who've done one or more acquisitions on mostly around acquiring, whether you describe them as MSPs or integrators or consulting shops, but primarily shops with cloud or public cloud management expertise. So, and I think that speaks very clearly to where they think this market is going and where they want to make their investments and what kind of products they need to add to their portfolio. It's no longer just servers and some co-location. It is definitely about managing customers on public cloud platforms. So I think Navisite made 2 acquisitions this year. I think they were both around AWS. Rackspace just did something in Europe, also on the cloud consultancy side. Effectual, which is made up a lot of the former DataPipe guys, also did something, 2 deals, I think, kind of late last year and this year. One with a public sector expertise. Central Logic here in Toronto managed to pick up both an application hosting shop as well as a a public cloud MSP shop, and so all those organizations, that serve, that have a managed hosting pedigree, but are shifting their business. Rackspace we'll talk more about, but being the prime example. On the MSP side, that's sorry, did I say MSP? On the SMB side, the almost frenetic waves of consolidation have already, pretty much come to a conclusion in North America. Minus some small pockets here and there. But I think the consolidation in the SMB tier is still pretty much active in Europe. There are around 3 or 4, I think, vehicles or kind of roll-up vehicles that we've been tracking that are focused on different parts of Europe. So that's been interesting. Given the fact that the North American market is highly consolidated, we've seen like a web.com start to try to roll up some assets in APAC around Australia and Singapore. So that's kind of a new geographic entry for them. And then the likes of GoDaddy, who already have scale, who don't necessarily need to buy other businesses to scale, are continue to look at technology and expertise. So that's kind of what we've seen. It's been a slower year on that front, but I think the M&A trends and dynamics that were in motion continue, and you should expect that that won't slow down. And if anything, things might pick up as we enter 2021 and things normalize over the course of the year, hopefully. The telco spinout thing, not thing, but the telco spinouts have that phase, that cycle, I should say. Is starting, it's definitely mostly reached its conclusion in North America. There's still probably a bit left to do out in Europe and Asia. But it was a relatively, at a glance at our tracking, it was a relatively slower year on that front as well. But Jabez wanted to talk a little bit about, kind of the new, kind of what's happening around different strategic buyers or strategic owners that are pursuing spinouts. A little different from what we've seen kind of with the telcos acquiring data center operators and managed hosting companies, and then deciding that they didn't want them and divesting them. But maybe Jabez, want to quickly touch on that before we talk about some other things?
Yeah, I think the telco spinouts have been going on in a more incremental basis. There hasn't been a huge spike, I would say, in telco spinouts. Like every year, we've tracked telcos that are divesting their data center assets, and I think that will continue. Given I don't think there will be a spike, but it'll just be a gradual shift as telcos slowly start to realize that data centers aren't a core critical proprietary piece to their business, and that they're ultimately going to have to focus on the network piece and building out 5G capability. And so I think that in turn you could continue to see more and more telcos over time divest their data center assets. But what I would also group into that telco divestiture bucket is what most people don't think about is system integrators. They kind of also fall into that similar bucket where they are starting to move further and further up the stack in terms of providing more kind of cloud migration, cloud consulting, managed services, managed third-party cloud services for their clients, and it's less so dependent on them owning the actual physical data center. So you could argue for a lot of these SIs, the data center business isn't going to be a core business for them moving forward. It's just an underlying enabler or underlying infrastructure piece to enable the rest of their managed services business as they move further up the stack. So I do think you'll start to see more and more of these system integrators start to divest their data center assets as well. And I think as a provider, if you're a data center operator and you're looking to do more of these tuck-in or strategic acquisitions or sale leaseback acquisitions with arguably slightly better upside tenants. So if you do a sale leaseback with the telco, not as much upside as I think if you did a sale leaseback with a system integrator. There's still more of a runway for them to expand and grow, given that they're focusing more on the cloud piece of the business. And so I think you'll start to see more of a focus on acquiring and sale leaseback deals around system integrator data centers.
Mm-hmm. Okay. Yeah. So what do you think? I guess we're getting to that prediction time of year as we get ready to move into 2021. Any bold? I mean, I'll leave it open to you to make any bold predictions, but I'll also ask you, Equinix Digital, what do you think, some of the most active and largest platforms in the world, what do you think they'll do next? And what does that mean for the rest of the market?
Yeah, I do think you'll see a bigger push from digital realty into Asia. I think over the last couple of years, you've seen them sort of slowly build on their Asia Pacific platform. They have a very veteran and established management and corp dev team running the APAC region. And so, I think it's not a small feat to pull a JV out of Japan with one of the largest conglomerates in Japan and Mitsubishi. And so that, I think, if that's anything, is a sign that they will continue to prioritize the APAC region. They're one of the first carrier neutral platforms to enter the South Korea market. And so that's also not a small feat. And I think you'll see them expanding more into these other emerging APAC markets. So I think look for digital to do that. And I think through their interaction platform, you'll see them start to push more into these edgy markets, quote unquote edgy markets, like we've seen recently with the Croatia acquisition, recently with the Helix acquisition in Greece, and also in Latin America with their Ascenti platform. That's going to be a big platform for them to push into more of these Latin America markets like Chile, Argentina. And so I think, expect digital realty to really start to fire on all cylinders moving forward. Equinix, the same thing. I think they're more, I think, focused, and correct me if I'm wrong, more focused with building out their Equinix Fabric SDN capability, which they've kind of really starting to ramp that up on a global basis. They're integrating that with the bare metal packet offering, which is a super interesting value proposition, not just to drive interconnection, but also to offer a wider set of infrastructure solutions for their customers. And it's really telling too, because they've moved from retail colo, which is half rack, full rack, cabinet type offerings, and now they're offering bare metal servers on a server level. And if you look at the trajectory that they're going, it's very similar to the trajectory that AWS is going, because think about recently how they've disclosed they went from doing these outposts, AWS outpost racks that would take up a couple of racks to a cage, and now they're offering outposts on a per server or a per U on a per U basis, which kind of speaks to that trajectory of smaller size increments of compute, cloud compute, automated compute capacity that's very API driven, that companies can spin up and spin down on an automated basis. So I think that's going to be super interesting for the Equinix platform moving forward as they transition from a kind of a pure data center colo company to more of a digital infrastructure company moving forward.
Yeah, I don't know if that translates to M&A for Equinix, but certainly they showed that they're willing to use M&A with acquiring Packet, making a big bet on that. So yeah, maybe there's something like that would be, let's call it, very unexpected from them. Yeah. So maybe, I think on the MSP cloud side, from an M&A perspective, maybe I'll just comment in general, maybe quickly on Rackspace. Yeah, I think that I think their recent acquisition might be telling, in that they bought a shop in Germany. So I think that they have been relatively conservative over the course of their history when it comes to global expansion. But what they're sharing on their earnings calls and the analyst briefings is that they are seeing more demand across the around the world, and they're quickly trying to build out the capabilities to address that, where they would probably admit that they're a little short of at the moment. So I would think that they're going to go kind of looking for some good cloud shops that specialize in in AWS Azure in some key markets where they've seen demand, so that they can better target those bases. And they certainly had some pretty good success with the Onica acquisition, which was a Canada and US based platform that like Cloud Shop, and they've really that group internally has really helped drive the business there. And so yeah, I think in general, just when it comes to M&A next year, I would say I would expect probably an uptick in activity. I think that's one. I think there's going to be more. You should expect even more technology driven across different parts of the ecosystem, SMB like GoDaddy, Rackspace, up to the larger data center operators, all looking for new capabilities and kind of accelerating those capabilities by acquiring them. So, I think that's going to be one of the main things to look for. I think everything else will, they're going to continue to look at the opportunities that they have, largely around geography or, nice scaled providers that can add to their base. So, any other thoughts before we move on? I know we're starting to get up there in time. Appreciate you guys that are sticking with us. I think maybe just quickly, while still on the topic of M&A, definitely I think over the last 12 to 18 months we've been tracking deals that are obviously motivated by geography, but they're also motivated by connectivity or strategic connectivity points or locations. Equinix, DataBank, acquiring portfolios that extend not just their data center footprint for compute and storage, but also the connectivity points that they can start to serve and access. And so, yeah, I think that we've touched on some of these others, but I think that some two that we've got up here I thought were pretty interesting. I believe they were both this year. No, maybe not the 1623 Farnham, I think was last year, but the Wells building in Wisconsin. And then I think DartPoints did something recently in it's called Metro Data Centers in Central Ohio. I forget what Dublin, that's it, was the city. Not great with the Ohio geography, despite watching all this election news over the last half year or year. But yeah, but these transactions around strategic connectivity points in second tier or definitely more off the beaten path markets has been something that's starting to develop. And I think, back to the predictions thing, I think we'll see more of going forward. So I think we maybe have touched on quite a bit of Chin Data fastly. This is kind of what happened in the IPO arena. I think the question marks here, just FYI, everybody, are just people who've been in and out of the rumor mill. Maybe I'll just quickly comment and say that I thought what was interesting is that there have been some entries and exits from the SMB space. I don't have all the logos here, but LocalWeb is an SMB provider out of Brazil. OVH kind of straddles, the SMB to mid-market, rumored to potentially go public. You saw Endurance International, or you saw Web.com, I think last year, leave the public markets. And then you're going to see Endurance International leave next year. And then we don't have the logo up, but Squarespace, there's been reporting in Bloomberg, another outlet that the Squarespace, the site builder, is going to potentially go public next year. And so I think that's interesting in that you see some of the kind of more quote, quote, traditional SMB providers kind of leaving the public markets and kind of the next gen or site builder oriented ones entering. So yeah, I think that speaks to what's been happening around the SMB space. Definitely those site builder platforms. And some people ask us when they look at I think our SMB 5-year CAGR was 12 or 13%, and some people have told us that, hey, that's a little high. But I often respond and say, hey, listen, if you think about the market on a global basis, if you think about the site builder platforms that are growing far faster than some of the traditional kind of shared hosting vintage, those kinds of providers, there is definitely quite a bit of separation. And I think there's something to be said about not just the freemium model, but the site builder, just kind of that way of approaching SMB customers is definitely changed the game a bit. So Jabez, maybe I think I'll tee this up for you, but we've been obviously tracking hyperscale and builds around the world that is happening at a frantic pace. The data centers follow. And then as well, alongside that, the interconnection nodes are increasingly and quickly becoming global. You've completed some market share analysis that we'll be publishing to our clients, hopefully in another week or so. Maybe want to talk a bit about that and summarize some of your findings?
Yeah, so I think, last, call it 2019, when we published our first interconnection kind of market sizing and trend study, what I initially said was, hey, virtual cross connects or the SDN platforms are doing great at bringing these automated self-provisioning virtual cross connects to market and allowing users and customers to spin up and spin down their own virtual connections on an on-demand basis. Basically, I call it the cloudification of network. And what we've seen beginning is that, in interviewing a lot of these providers, their feedback was, hey, physical cross connects are not going away. They are going to stay, and they're going to continue to grow. They initially viewed virtual cross connects as a way to satisfy burstable bandwidth workloads, test dev type connectivity workloads where they can spin up, spin down, and then once these kind of virtual connections reach a more stable bandwidth flow, they can start to transition them into more stable physical cross connect type deployment. And I think what we're seeing today is the maturation of the virtual cross connect or the SDN platforms in terms of provisioning these virtual connections, and they're increasing the amount of capacity for these virtual connections, where I think now it's up to 10 gigs of capacity for virtual connections that you can provision. And so virtual connections have become more of a, from a, let's use it for burstable seasonality, test dev, into, hey, let's actually use virtual connections for production workloads, which is what the feedback that we've been getting from interviewing these providers, is that they're seeing more and more production workloads enter or are being deployed and used by these virtual connections in addition to physical cross connects. So I think that's going to be an interesting driver for virtual connections moving forward. That's not to say that physical cross connects will go away. I think there's definitely still going to be stable and solid growth on the physical cross connect side, but really the primary growth driver for the interconnection market moving forward will be the virtual connections and virtual cross connects.
Yeah, and that's definitely been a big part of, I think we talk about the separation in the co-location market. First, I think, obviously between retail and wholesale, and now you're seeing retail split between those with an interconnection oriented or interconnection focused business and strategy versus those that are still bread and butter retail co-location. Many markets that we track, we've seen this kind of effect where retail continues. The growth rates are increasingly slower than some of the hyperscale wholesale growth. But the outliers to that, or the exceptions to that rule, are the Equinix's, Cologic's, and these kinds of companies around the world that have an interconnection story that they can kind of bolster, maintain, I should say, revenue growth and drive that through the interconnection value add. And so I've been working on this theory. Jabez, I don't know, tell me if I'm nuts, but I think that retail will probably continue as a over total category, continue to kind of just move along the way it's moving. So it doesn't necessarily have a ton of upside necessarily, but it's definitely strong and solid and sticky enough that it's not going away. When we're building out our market share projections, we're thinking that as hyperscale cloud continues to grow and the opportunities for more cross connects, virtual connections, physical connections to clouds happen, that the retail, inclusive of interconnection oriented providers as a category, might be able to make a rebound of sorts, maybe 3 to 5 years down the road. Or do you think that, and that's why I've got this kind of, that's a hockey stick kind of trajectory. What do you think of that? Are you a believer, non-believer, somewhere in between?
Yeah, I think it's interesting. When you initially showed me that slide, I was like, no, I don't think retail colo is going to bounce anytime soon. And it's truly been a sort of a sleepy year, or sleepy kind of 1 to 2 years for retail co-location, as hyperscale has really stolen the show, as as evidence from a lot of these new platforms and data center market entrants that have entered the market, and focusing primarily on the hyperscale business has kind of left retail colo in sort of this like ugly duckling phase, where it's not really, unless you're an Interaction or an Equinix that has a very interconnection oriented piece to attach to that retail colo offering, it's been kind of not been a very quote unquote sexy part of the business, if you will. I think you're seeing signs of that turning around with the digital edge guys trying to bring that Equinix 2.0 flavor to the Asia Pacific region. But I do think, the more I think about it, the more I do believe that, yes, I do think retail co-location growth will rebound at some point, probably in the next 2 to 3 years, because we're talking a lot about decentralization of infrastructure, and not just hyperscale, but infrastructure as a whole, where you're needing to be deployed in much more locations to get closer to the end user, whether it be on a remote modular basis or just a smaller regional edge data center. So I think that will drive the overall retail colocation growth to kind of rebound, because of the fact that there's so many untouched or so many of these kind of secondary markets that are still very underserved. I think the data bank acquisition is a big example of the opportunity that Raul and the digital calling team are seeing for these kind of regional edge footprints. You're seeing kind of these edge providers like Dart Points and Edge Micro and those guys that are building more of an edge footprint. I think you probably have to classify that as probably retail colo, but with an edge component to it. So I think if you do lump that edge piece into the retail colocation segment, yes, I do think you'll start to see a rebound in retail colocation growth. If retail colocation in your definition is based on that size form factor of smaller cabinet, half cabinet, even that type of footprints. And I think the focus of AWS in terms of pushing that Outpost solution to customers could also drive that adoption and drive the growth of the retail colo market in general. I'm not sure. I know you've done a lot more work on Outpost than I have, Phil. What are your thoughts on that potentially impacting that retail colocation market? Because it's essentially a private cloud. It's essentially a private public cloud in that sense, where you're getting that on-premise public cloud platform API driven into your data center pretty much.
Yeah, I'll address that, but before, just note that you volunteered to revamp our tracking to include edge data centers within the cloud. So that exercise on that tracking sheet is all yours. So congrats on that. But Outposts. So yeah, I mean, I think it's fascinating what's going on there. I think that on the one hand, I would say it's going to be an opportunity if you look at what's going on with local zone, which is the new kind of availability zone that's obviously smaller, and from what we're seeing, at least the initial ones in Los Angeles in your backyard are with colocation providers. So in that sense, that's demand, additional demand for colocation. And is that in the retail? It's not necessarily wholesale hyper. In that we've seen, I think we've got word that it's like 100 to 200 racks or something like that, and then they'll build out another one. So probably falls in that category. So it's I think a meaningful uptick on what the average retail deployment might look like with a high quality customer and a very sticky one at that. So I think that's going to be good for providers in markets like Los Angeles or in edge markets like where some of these other operators, Flexential, TierPoint, DataBank, where they are. There could be demand emerging there. But yeah, I think that I and people, the skeptic will say, hey, maybe they can perhaps just build. Would there be some option for them to get around colocation and do something themselves? I don't know if that's going to be. I've had that question. I don't know if that's going to be the case. It's my short answer. I think that the Amazon likes to build at scale, right? And I don't know if the edge kind of deployment size and the multiple locations is how they're going to achieve scale. I think they're going to focus on the software and management piece, the automation piece to drive the efficiency, the operational efficiency they need, and they'll I think rely on colocation. So yeah, I mean, I'm not sure I have a and the smaller form factor that they're developing, or just single Outpost appliances, make an interesting potential test case for some of these micro data centers, because that's what we've been, at least in some of these deployments we've seen or heard of and spoken to operators about. They are pretty small in very specific locations, and so you could potentially see that happening. I know we have a slide that was going to talk about this, but we'll just get a little ahead of ourselves. So yeah, I mean, I think overall, I mean, I think at least my sense is that why I kind of came up with this working theory is, if you want to call it that, is that the more places, the more cloud infrastructure, the more locations, whether that be on a global basis or towards edge markets, just creates more addressable market for interconnection. And I think that to try to back up this theory, I think that what we're seeing in terms of speaking to operators and talking to customers, that more almost universally, providers are saying, listen, increasingly the large percentage, if not all, our conversations with customers, and that's new and existing, are around cloud connectivity. So new customers are saying this is a requirement, and it's non-negotiable. We need to have this, and then existing customers are coming back and saying, hey, how can I connect to cloud, or how can I move some stuff off premise? And so I think if you extrapolate that activity on the ground to market projection, I think it translates, right? I think it eventually translates into customers purchasing according to that, and then I think you'll see it reflect in the numbers. So do a quick time check for everybody. I guess we want to keep it at around 2 hours, but we're pushing that. I know we've already kind of hit some of the topics that so this was basically what we've just been talking about. So maybe I'll skip along. I think we've talked about some of the hub and spoke markets in our earlier conversations. I think this is interesting as well, maybe just to highlight this for everybody. We've talked about hub and spoke markets around the world, in national markets like Germany, like France, Canada even. But we're also starting to see this dynamic, I think, emerge around kind of smaller, like edge geographies, like this is Ohio, with the center around Columbus, and then infrastructure being set up around it, and to create kind of a connectivity hub that, of course, connects out to other major metros. So we're starting to see hub and spoke even within, not just core to edge, but within the edge as well. I think we talked about this as well. So maybe we'll, maybe move to. So I think some of you have been using the Q&A function, and I'll start maybe Jabez, we can start trying to address some of them. But this is some of the things we can go back and forth on as we move up to 2 hours. Jabez, maybe I'll throw one question. If you look in the chat, there's one from Joshua, was just I guess he's looking for some thoughts on 2 markets in APAC. I think they were Malaysia and the Philippines. And then I'll take the question on Canada.
Yeah, we've seen less activity in the Philippines this year, but I do think that Philippines, or Manila in particular, is a very interesting market, because Philippines in itself is a very distributed or fragmented, geographically speaking, because they're just made up of many islands into a single country. Their location is kind of a midpoint between East Asia and Southeast Asia, so they act as a really strategic kind of gateway market from a subsea cable standpoint, from a connectivity standpoint. They share similar dynamics to markets like Jakarta, where they have a relatively nascent internet population that's sort of accelerating in mobile adoption and online gaming and whatnot. So I do think that Manila will be a more and more strategic market moving forward. We just haven't seen the activity to back that this year as of yet, but we do think we will be keeping a close tab on that market. I think Malaysia has emerged as more of a viable growth market, given what we've seen happening in Singapore with the current moratorium on data center build. So essentially no new data centers allowed to be built in Singapore as the government reevaluates the value proposition of data centers to its national interests and economy. And so that's really been driving the growth of data center capacity demand outside of Singapore into Malaysia and Indonesia. Malaysia has started off as a focus for the Chinese hyperscale platforms. Alibaba, Tencent have made bets on the Malaysia market, and then you're also seeing that hub and spoke model where KL or Cyberjaya is the core and the hub of Malaysia, and then you're seeing adjacent markets like Johor and Iskandar emerging as these kind of one-off hubs that are catering for hyperscale demand, that are just across the bridge from the Singapore market. So they're in very close proximity to Singapore, at a much lower land cost, and given the freeze in data center builds in Singapore, that demand and that supply has to go somewhere. I think that Malaysia stands to benefit as that alternative market to Singapore that it's always been positioning itself as. For as long as I've been covering the Singapore market, Malaysia has always said, hey, we are the New Jersey to the Singapore's New York. We're going to emerge as that alternative location, and I think that's really become more and more front and center this year, given the moratorium, given the pandemic. And so I think, yeah, you'll start to see more and more hyperscale activity happening in Malaysia. You're already starting to see some acquisitions and M&A happening. You're seeing that Bridge Data Center acquisition from buying the CSF group and then rolling them out into the Chin Data platform. You have PCCW buying a My Telehouse data center that's may not be of note now, but I think it does have a connectivity kind of hyperscale, Chinese hyperscale piece to it, given PCCW does a fair amount of business with Chinese hyperscale clouds in Hong Kong. So I do think, yeah, you're starting to see that activity in Malaysia start to pick up, and I think that will be very bullish for that market moving forward.
I hope I think Josh was still on the call, so I hope that's helpful, Joshua. Actually, you can check there. Okay, I'll take the question on Canada. Maybe Jabez, if you flip through, see if there are other questions coming in. I think I saw something. Thoughts on the Canadian market for hyperscale adoption? Not sure if that's question is around hyperscale clouds consuming colocation or mid-size and enterprise consuming hyperscale clouds, but maybe I'll try to quickly address both. In terms of overall trends, I think let's start with the data center side. I think this cloud landed in Quebec, and it's kind of hit that point where it is increasingly not able to serve the rest of the country, and so that's why you've seen this wave of buildouts in Toronto, and I think you can take that dynamic and translate that out to the west. So we're pretty we're pretty sure that will happen at some point, maybe sooner than later, where one of the hyperscale platforms may go out west and try to serve that region of the country. But in terms of the tracking, there's an anonymous attendee who put the question up, but if you're still on the call, we just did a webinar on the Toronto data center market this morning at 10 a.m. and there'll be a recording, so you can check our YouTube channel for that. But the numbers are consistent. These markets, like many around the world, are quickly becoming increasingly slanted to the wholesale side, and as well the healthiest growth is coming from the interconnection oriented colocation providers in Canada. That would primarily be Equinix, Cologix, and Digital Realty, what they're doing. From the Canadian perspective, on the end user side, I've always described Canada as relatively conservative IT market. So I would describe public cloud adoption as very early stage, very incremental, and very conservative in approach. So especially when the higher you move up the enterprise value chain. So what I think that means for any whatever part of the ecosystem I see you followed up the question, enterprise consumption. Okay, sorry. But from whichever part of the ecosystem that you come from, there's going to be value there. Because I do think the enterprise adoption has just started. Really, if you think about it, I think the long and short of the story is that I think Hyperscale didn't go live in Canada till like 2017. So that was barely 3 years ago. And a lot of that I would argue was because large, mid-sized to large organizations were hesitant to run, or just unwilling to run their infrastructure and have the data hosted south of the border. So they, basically told the clouds that if you don't have, you got to have a data center, and we have to have the data stored in country. So, so that if you think, 3 years, that is not a ton of time for the entire market to transition to this model. Typically, it's probably more a 5 to 10 year process. So using those as general, not a rule, general benchmarks, but you should expect that demand will continue. It will continue to come from larger and larger organizations. I would argue that current public cloud adoption in Canada is relatively slanted to the SMB to mid tier. A lot of it going to the Microsoft 365 platform and things like that. I'll stop there. I don't want to monopolize the time on there. Jabez, do you want to? I think there's something there for you. Do you want to fastly or?
Yeah, so Kyle, I'm not 100% familiar with the CDN market. It's not a core coverage area for us outside of what we've been tracking with Cloudflare and Fastly and what they're doing on the edge compute side. So I'm not sure I can answer that question
Maybe
for you here.
Yeah, maybe I'll grab that. Grab it, Jabez. I'm also not familiar with those tier 2 CDNs as well. But I think we, in following what's going on there, I would argue that the most interesting thing these days is that and I've heard this comment, and I would agree from others, that the CDN market, has been doing. It's done the edge for 20 years, and it's been focused more on content caching and delivering content and application acceleration and optimization. What's interesting now is that the CDNs have the footprint built out, and they're translating those platforms to delivering compute at the edge, compute and storage. And so I think that's what is going to, I think, give this category, which has become, over the years became very top heavy, but really gives some of these platforms not a new lease on life, but I would say a very an opportunity with upside. You combine that with what's going on as driven by the pandemic around content streaming, streaming and the internet just increasingly reaching all corners of the globe. I think the CDNs are in an entering a period where there's a lot of opportunity out there, and so I may not specifically know those businesses you referred to, was it Kyle? But I think that with an opportunity that becomes that big, there is room always beyond kind of the leaders of the pack. I think I've always argued that's the nature of infrastructure services, that there's always going to be room for certain different requirements and preferences. And so, I think that, Jabez said we haven't tracked the CDN space as close as we probably could have or should have. But that has changed again around, and maybe we're just maybe you can accuse us of throwing just different buzzwords at it, but no, I mean, what the stuff around edge, I think really brings CDN more sharply into focus for what we do around research in the space. So hope that addresses. There's one more there.
Yeah, Ken had a question about how do we define platform, but I don't think Ken's on the call anymore, but feel free to answer it. I'm sure it's a quick.
Yeah,
quick one.
We kind of use the term loosely. It's the short answer. Everything's a platform, right? I think I'll just leave it at that. I think we're almost at 2 hours, so that's probably. We can maybe use up the last 4 or 5 minutes. Somebody raised. Why don't Jabez? Do you want to look at anything here on these bullet lists and comment? Anything there to comment on? And I'll take the.
I think we touched on.
Go ahead.
Yeah, no, I think we've talked a lot about most of these data points. We also talked about some of the key APAC markets to look for this year. Talked about cloud gaming. So yeah, I would say like a lot of these kind of software as a service, these SaaS companies, a lot of these companies, because of COVID, they've been trading at really high multiples on the public market, and they have been using that equity that they've built the company into to do acquisitions. So you're seeing that more prominently with Salesforce buying Slack on the workplace collaboration side. You have Fastly with Signal Sciences. You have Twilio with Segment. So yeah, I think I think digital transformation and all of these secular trends coming together and accelerating all at the same time will lead to more and more M&A moving forward. And that's also true with the IPO market, as we've seen a record number of tech IPOs over even the last kind of 3 months. So I would say that's definitely something that we're keeping an eye on as well.
Okay. Yeah, maybe, and I'll conclude. I think we've talked a lot about everything here, which is good. I think maybe I'd close with the comment that I think sometimes, you'll sit through this and look at, the conversation around hyperscale and the ecosystem around it, and maybe we don't drill as much time into the various different parts of the ecosystem. I think it's important to emphasize that while these platforms like AWS get bigger and bigger and bigger, and that kind of top heavy group of large companies, providers, platforms, however you want to call them, refer to them, seemingly dominate the market, and maybe to some eyes, maybe run over the market. I always push back against that and argue that if you think about the market on a global basis, if you think about the various pieces that come together to make it work, that now increasingly rely on each other to make it work, I think is extremely important to keep in mind, and I think it's what drives the fact that there are always going to be pockets of good providers that serve different subsets of requirements, like in the SMB, DigitalOcean, Linode are companies that continue to grow. They may not have 10 billion a quarter in revenue, but they definitely have a scaled business, and they serve an important group of customers and requirements in geographies around the world. That's important to keep note of, and also just the fact that markets consolidate, management teams come out, and they build for the next opportunity, the next iteration, the next market. Sometimes they, you see a lot of the soft layer guys sold to IBM come out, and they're at stack path, right? Jabez talked about the Equinix guys. Some of the Equinix guys went out digital. There's more than one provider around the world with ex-Digital Realty guys backing that operation and building it. And so the industry is so dynamic, and it's just got such a good long-term outlook that not only is it attracting capital, but it just creates new opportunities as things get more sophisticated. The edge is just, it's seeding an ecosystem of new and interesting companies. We come across every day a new company that we're not familiar with. Sometimes we'll look under the covers, hey, we know that guy, and sometimes we don't. But I think that really is proof that the industry is continually reinventing itself, and it continually, there's a wave of more traditional and legacy that continues to move, from the front, to the middle, to the back, and then, the new kind of leaders and the new market segments emerge. And the sector, I would close, the sector as lasting power, right? I mean, we still make the joke, mainframes are still around, and so you can expect something like shared hosting, something like retail co-location, something like bare metal services is not going away, has a very long shelf life, and it's increasingly it's about the tools that manage it. So if you're taking care of it, if you're automating it, if you're delivering it efficiently and adding value for customers, there's always room. The business is less about the underlying, increasingly less about the underlying infrastructure and more about the value add you can drive on top. That's always been our message. I don't think that changes. I don't know if that'll ever change. I think that's just core to how this business operates, and as it matures, I think that will increasingly be the case. So yeah, those are my final thoughts. There's actually one quick question that actually maybe can be a nice conclusion to my conclusion, which is a question around data. The question is data gravity versus edge. I think, to simplify like my thoughts on that, I think edge is about getting, is kind of location driven, going out further to the edge, hence the term edge, getting closer to end users, cutting down latency. Data gravity, I think of it often as kind of just the inherent stickiness and value of data that just doesn't, people don't delete anything. People just continue, just data storage, and that's how AWS built its business in the first place. Just accumulates, and never goes away. So data, it has an inherent amount of gravity. Like things, we have gravity here on Earth. Things fall to the ground. Data gets stored in a data set, on a server in a data center. Doesn't seem to go away. That's kind of how I think of it. So it's the value and in stickiness of the data, and then edge is more location. Where is the data going, right? It's historically been pretty centralized, and now we're entering that period where it becomes decentralized. And that's been a theme of the infrastructure. That was to be the theme one of the themes at our event this year that we're not able to hold, but certainly look forward to talking about that in the near future when things change.